We know that core inflation is easing, and we have an economy that's pretty lackluster. Growth was about, I think, 1.9% last year. You have every reason to be cutting rates.
So good morning, Linda. Thank you for having me back. Yes, actually, we've had a slower recovery last year than many people, including us, expected. We pretty much had back in February, we anticipated the softness in the last quarter of last year already, and the numbers came out pretty much roughly in line. But since then, I would say that the incoming data the last couple of months has actually been in line with what we had expected back in February. So consumption continues to grow at a more moderate pace. Tourists has actually, both in the numbers and the spending, has been a bit higher than we anticipated. And the manufacturing sector has actually kind of flattened out. The decline that we have seen for a long time has actually seemed to have leveled off, which is a good sign. On the export front, that's still sluggish, I would say, but recovering. And the big gap is actually the fiscal spending from the delayed budget. This has been a rather big drag, both in the last quarter of last year and the first quarter this year. I would say together, 2 quarters together, the drag is about 0.8% of GDP compared to normal. So it's quite a significant drag. But overall, I think the economic picture is what we had anticipated back in February.
Can that pave the way for you to cut rates in April? When you take a look at the markets, they're pricing in big bets that you'll be cutting rates. If you take a look, 10-year yields down 80 basis points since that peak we saw in October. The sentiment out there is that you will be cutting. What do you make of that?
Well, actually, our reading is that the market is split. It's not completely unanimous. And actually, I would say that the context is important, right? So in the broad context, we went through a soft patch in the second half of last year. That was partly due to cyclical factors, for example, the delayed recovery in the global electronic cycle, but also partly some structural factors, that meant that we did not benefit as much as we could have from the uptick in, say, external demand. But looking forward, we actually expect that softness has passed, and in the near term, there is actually a cyclical pickup in growth. If you look at the guidance that we gave for this year, 2.5% to 3% of growth. Behind that numbers, if you look at the quarter-on-quarter momentum, it's actually around 1% on average for the whole year, even if you come in the bottom range of that. So that's an annualized rate around 4% for the year. The momentum that we and most other houses expect is actually not that bad. The year-on-year figures may come in low because of the base effects from last year. So what the MPC will be doing at this next meeting will be assessing the durability of this pickup in near-term growth momentum, and that depends on how strong the cyclical drivers are and how big the structural drags are going to be. So I think that's the main question in terms of the policy decision.
Given what you're seeing right now and given the growth that you're talking about, is it reasonable to think that you can maintain that neutral rate of 2.5%? Does anything change that target?
Yeah, so I mean, the committee aims to be broadly neutral given where we are in the overall macro picture. And, broadly neutral is a very, not an exact estimation to have, right? It is true that there seems to be a slower trend growth than we had anticipated, maybe, looking back a year or 2 years ago. So that would figure in whether there is a need or not to recalibrate the neutral stance. But that depends also on the strength, as I said, of the cyclical recovery that we are seeing coming in at least in the first half of this year. So the first question is to decide whether there is actually a need to recalibrate neutral. And if there is one, then the timing is the second issue, what would be the appropriate timing of the recalibration. So I would say it's hard to prejudge the decision right now, but whatever is being considered is more like a recalibration rather than an easing cycle to support the economy, because the economy is actually recovering, as I said,
Right.
especially in the first half of this year.
Piti, is no secret the Prime Minister wants you to cut rates. In fact, he says you should call for an emergency meeting. How are you responding to that pressure from the Prime Minister?
Yeah, as I've said, I mean, we've had a very constructive dialogue with all parties, including, the Prime Minister, the fiscal, all those parties in the government. We do listen to all the inputs, appreciate those inputs. It's a judgment that needs to consider quite a big set of factors, both in the short run and long run, as well as the distributional consequences of our decisions. So I think that input is useful and valued. We have been talking about that, but I think everybody understands that we just want to deliver on our mandate of price stability, sustainable growth, and financial stability. And everybody respects the operational independence that we have in terms of the monetary policy setting.
Piti, I want to touch on the Thai baht, lackluster performance, second worst performer in Asia year to date, and that's mainly because of the outflow of funds. How are you looking at the Thai baht? Are you concerned about the weakness?
Yeah, it has been a very short year so far. So yes, we have had some weakness. We are roughly at a level we had been back in September last year. So it goes up and down. The last couple of months, the dollar had strengthened a little bit. That made us weaker. But we also had some domestic Thai specific factors. Basically, the GDP numbers, for example, came in soft. That was partly the reason why we had more softness than other countries. But actually, looking forward, I think it's important to note that for us, and actually for many countries in Asia, the current level of policy interest rates are closer to neutral than, say, in many advanced economies, including the Fed. So if you look forward, the likelihood of policy adjustment for the Fed would be a lot bigger than countries in Asia, including Thailand. So I think on that front, and also given the recovery that is projected, I think there is some support for the baht going forward. And the fund flows have been negative last year, quite substantial. So far, the first couple of months has also been negative outflows. But I think we have to take a bit more medium-term view of the currency.
So, Piti, are you then saying that you're waiting on the Fed, that movements by the Fed later in the year would perhaps cause some weakness in the dollar and hence support your currency? Is that what you're waiting for?
I'm not waiting for that, just saying in terms of looking forward, the factors that could influence currency in the region and including the baht, it is an important point that our starting point in terms of policy is quite different. Being closer to neutral means rates are likely to stay here or not far off from where they are right now, so that if the advanced economies start cutting rates as is expected, the differential will be a bit less. That at the margin would be a supporting factor, but that's not a main consideration for us. The currency has not posed a particular problem in terms of stability or in terms of growth. It's helpful a little bit on the inflation front. So I would say that there's no big policy issue in terms of currency level right now.
What's the biggest risk to all your projections that you've made today?
Well, one big risk is actually we hope the budget disbursement. The budget has been delayed for around 2 quarters, and it's expected to come in line in April. So there'll be some makeup, particularly in the investment, public investment, and the risk is that the execution of having to make up or backload those spending in the scale that is required. Whether that can be implemented as much as forecasted. So that's one big factor. And I think in terms of the global picture, it actually seems a bit more positive than say last meeting.
Right.
So yeah, I would say that would be the main factor.